Hi everyone, today we are going to present our financial management group assignment. We choose Nestle Malaysia Berhad and FNN Holdings Berhad Company. And this is our group members.
Okay, 1.0 company background. The first company that we choose is Nestle. Nestle is a giant in nutrition, health, and wellness that caters a wide portfolio of products such as dairy, beverages, confection, culinary products, cereal, and instant noodles. The firm has come up with specialized products that suit the various dietary needs, such as plant-based product, infant nutrition, and functional foods. Nestle also paid special attention to digital change, targeting e-commerce and data analysis to improve the interaction with customer and simplify the processes. The second one is Fraser and Neff Ltd, FNN. FNN is one of the leading food and beverages companies in ASEAN region with excellent presence in Malaysia, Thailand, Brunei, and Indochina. It is focused on soft drink, milk, packages, food, where some its brands such as 100 Plus, FNN Fun Flavor, FNN Seasons, and Nutrisoy.
First of all, horizontal analysis of Nestle and FNN Berhad. Liquidity ratio. Nestle's current ratio shows a downward trend from 2022 to 2024. A current ratio of less than 1 means that the company has higher current liabilities than the current assets, which can indicate that the company has issues in settling in short-term debt. The downward trend reveals a diminishing ability to settle short-term obligation over the 3 years. During these 2 years, FNN current ratio was 1.06 times and 1.007, respectively, very near to 1.0. The company's current assets were just sufficient to meet its current liability, indicating a somewhat tight liquidity position. The current ratio increased to 1.59 times in 2024, marking a notable improvement. Nestle's quick ratio is also less than 1 across all 3 years, which indicates that without considering inventory, the company may not be able to pay its short-term liability using its most liquid asset. While it increased slightly from 2022 to 2023, it declined again in 2024, which indicates unstable management of extremely liquid assets in relation to short-term liabilities. In 2022 and 2023, FNN most liquid assets could only cover around half of its current liability, according to fast ratio of 0.57 times and 0.58 times. This implies a significant depend on inventory sales to cover its short-term financial obligation. With significant improvement in 2024, the quick ratio now stands at 1.19 times. Between 2022 and 2024, Nestle's accounts receivable turnover ratio decreased from 49.67 times to 38.56 times. The percentage shows reflects the efficiency of the company's credit sales, the collection. In 2024, for example, a high turnover ratio shows that Nestle had been collecting its receivable in an efficient and timely manner. However, the decrease in activity over the following 2 years indicates that debt collection efficiency is decreasing. This may be a consequence of slow paying customer or more flexible credit arrangement. The current liquidity and cash flow of Nestle could be influenced if this trend continues. And at the same time, FNN's account receivable turnover decreased from 57.1 to 5.43 times from 2022 to 2024, showing a steady decline in the company's capacity to gather cash from customers. This indicates that FNN collection of credit capacity decreased over time, which if poorly handled could have an impact on its finances. The average collection period reveals the amount of time it takes for Nestle to collect from its customer paid. Nestle paid their receivable in within 7.35 days in 2022. In 2023 and 2024, this increased to 8.37 and 9.47 days, correspondingly. The steady increase suggests the business continued to take a bit longer each year to acquire money that might be a sign for flexible credit condition or decreased payment from customer. FNN's average collection duration raised from 57.1 days in 2022 to 47.64 days in 2023, based on the report showing more effectiveness in recurring payment by customer, despite the period extending to 67.2 days in 2024. The accuracy sharply decreased, which suggests a decrease in receivable payments the following year.
Hello guys, so today I want to presentations liquidity relations inventory turnover. So we will look part by part. So firstly we will go to Nestle company. We have 3 years, 2022, 2023 and 2024. The inventory turnover in 2022 for Nestle is 4.01 times, because the cost of sales 4,048,937 divided by 1,008,416 equals to 4.01 times. And for the 2023, 4,250,503,000 divided by 900,000 70,000 259 equals to 4.37 times. And for the third year 2024, the cost of sales is 3,800,017 38,000 divided by 831,391.5 equals to 4.65 times. So here, over the three years, Nestle inventory turnover improved steadily, increasing from the 2022 4.01 times to 4.65 times. This suggests that the company has become more efficient in managing inventory. It is selling goods faster and reducing the amount of capital tied up in stock. And a higher turnover often reflects good inventory control and strong product demand. Both are positive signs for operational performance. Okay, next we look on the FNN company. Okay, the inventory turnover for 3 years, 2022, 2023 and 2024. Okay, we look for 2022 first. Okay, the cost of sales for 2022 is 3,072,771 divided by 782,948 equals to 3.93 times the inventory turnover for 2022 year. And the 2023 year, the cost of sales was 3,083,006 divided by 754,571 equals to 4.09 times. And the last year, 2024, the cost of sales was 3,083,006 divided by 754,571 equals to 4.13 times. So over the three years, F&N inventory turnover ratio has gradually improved from 3.93 times to 4.13 times. So the indicates is get some improved inventory management and faster movement of goods, and last, better operational efficiency. So this is the indicates for the F&N company over the 3 years. Okay.
Both Nestle and F&N maintain a strong time interest earned ratios, reflecting their ability to cover interest expenses with operating income. Nestle's time interest earned stayed consistently solid. 37.35 in 2022 dipped to 21.31 in 2023 due to higher interest cost, then slightly rebounded to 23.44 in 2024 as operating income improved. F&N saw more fluctuation. Their times interest earned peaked at 160.55 in 2022, dropped sharply to 17.51 in 2023 due to a rise in interest expenses, but recovered to 28.99 in 2024 thanks to higher revenue and lower interest costs. Overall, both companies remained financially healthy and capable of meeting debt obligations. From 2022 to 2024, Nestle's debt ratio rose steadily. From 2022 to 2024, Nestle's debt ratio rose steadily from 78.40% to 84.24%. This indicates increasing reliance on debt to fund operations and assets growth. While this can enhance returns, it also raises financial risk and reduces flexibility. F&N, in contrast, saw its debt ratio increase from 37.90% in 2022 to 44.32% in 2023. The drop to 38.58% in 2024. This decline suggests a shift toward a more conservative capital structure and improved financial stability through deleveraging. Overall, Nestle's growing leverage highlights rising financial risk, while F&N shows a move toward greater financial prudence.
Efficiency ratio. First, for total asset turnover, we take year 2022 until 2024, and the total asset turnover for 2022 is 1.87, 2023 1.97, and 2024 1.70. And for FNN, year 2022 1.67, 2023 0.98, and 2024 0.96. FNN's total asset turnover ratio declined from 1.67 in 2022 to 0.96 in 2023, indicating reduced asset efficiency likely due to faster asset growth than revenue or underutilized resources. Management should review asset used to boost performance. Meanwhile, Nestle's ratio improved from 1.87 in 2022 to 1.97 in 2023 but fell to 1.70 in 2024, signaling a need to resist asset utilization to sustain strong sale. For fixed asset turnover, in 2002, Nestle fixed asset turnover ratio was 4.34, outperforming FNN's 3.06, indicating higher operational efficiency and better asset management. In 2023, Nestle maintained its lead with 4.22 versus FNN 3.14, reflecting stronger asset utilization and sales generation. By 2024, both companies show strong efficiency, with Nestle at 3.56 and FNN close behind at 3.04. So Nestle continue to have a slight edge in converting fixed assets into revenue.
Next, profitability ratio, operating profit margin. In 2022, Nestle Malaysia Berhad recorded a profit from operations of 790,626,000 and revenue of 6,684,591,000, resulting in an operating profit margin of 11.83%. For 2023, the company's profit from operations was 797,639,000 and revenue was 7,124,310,000, leading to an operating profit margin 11.19%. In 2024, Nestle Malaysia Berhad profit from operations increased to 897,015,000 with a revenue of 7,208,619,000, achieving an operating profit margin of 12.44%. Okay, next for FNN. In 2022, with a revenue of 4,470.2 million and operating profit of 454.1 million, the operating profit margin was 10.16%. For 2023, the company reported a revenue of 5,001.4 million and operating profit of 624.7 million, resulting in an operating profit margin of 12.49%. In 2024, the revenue increased to RM 5,245.6 million and operating profit to 697.0 million, yielding an operating profit margin of 13.29%.
Okay, next we move to gross profit margin. For the Nestle company, improved from 0.45% 2020 to 0.48% in 2023, then dipped to 0.43% in 2024, uh, hinting at cost or sale pressure. For FNN company, steadily from 0.36% in 2022 to 0.46% in 2024, showing there's consistent operational gains. Okay, next we move to net profit margin, which is Nestle gradual rise from 0.96% in 2022 to 1.2% in 2023 to 1.47% to in 2024. The margin remains modest. For FNN company, jump from 4.48% in 2022 to 6.18% in 2023, then dropped to 3.14% in 2024, possibly due to rising costs or non-operating expenses.
Okay, next we look on the profitability ratios, the operating return on assets. Okay, first we go to the Nestle company, the operating return on asset over 3 years, 2022, 2023, and 2024. Okay, firstly, our the 2022, the operating profit was 902,931 divided by 3,554,001 equals to 25.41%. Okay, and 2023, the operating profit was 940,472 divided by 3,569,222 equals to 26.35%. And the last 2024, the operating profit was 605,088 divided by 3,649,738 equals to 16.58. Okay, so in 2022 and 2023, Nestle maintained the strong and stable returns on its assets above 25%, reflecting high operational efficiency. However, in 2024, the operating return on assets declined significantly to 16.58%, primarily due to a sharp drop in operating profit despite an increase in assets. This suggests a decline in operational performance and highlights the need to examine cost control or revenue challenge during that year. Okay, next for the FNA company, the operating returns on assets. First, for 2022, the operating profit 447.0 divided by 4,119.6 equals to 10.7%. And for 2023, 642.9 divided by 5,111.6 equals to 12.6%. And last 2024, 709.5 divided by 5,474.5 equals to 13.0%. And the FNA shows a steady year-on-year improvement in operating return on assets from 10.7% in 2022 to 13.0% in 2024. This indicates increasing efficiency in using its asset base to generate profits, and consistent growth reflects strong operational performance, and with the rising profit outpacing the growth in total asset.
Profitability ratio, operating return on assets. In 2022, Nestle Malaysia reported a net income of 620,334,000 and common equity of 626,316,000, resulting in a return on equity of 99.05%. 2023, the company's net income was 659,870,000 and its common equity was 674,896,000, leading to a return on equity of 97.77%. 2024, Nestle Malaysia had a net income of 415,623,000 and common equity of 547,549,000 with a calculated return on equity of 75.90%. FNN. For 2022, the net income was 382.3 million and shareholders' equity was 2,668.0 million, resulting in a return on equity of 14.33%. In 2023, the net income was 542.0 million and shareholders' equity was 2,900.5 million, which led to a return on equity of 18.69%. Finally, for 2024, with a net income of 601.0 million and shareholders' equity of 3,180.9 million, the return on equity was 18.90%.
And I will be presenting about the vertical ratio analysis for Nestle and FNN for the year 2024. The comparison is based on the key financial ratio to help us understand the performance, efficiency, and financial health of both companies. Let's begin with the current ratio. FNN recorded a current ratio of 1.9 compared to the Nestle 0.4. This indicates that FNN has a stronger liquidity and it is a better position to pay off its short-term debt using its current asset. Next is the quick ratio. FNN again performed better, scoring 1.19 while Nestle had only 0.21. This means FNN can settle short-term liabilities even without relying on its inventory, while Nestle might struggle. Moving on to account receivable turnover, Nestle is far more efficient here, with a turnover of 38.56 times compared to FNN's 5.43 times. This tells us Nestle collects its customer payments much quicker. In line with that, Nestle's average collection period is just 9 47 days, while FNN it takes about 67.2 days to collect from its customer. Clearly, Nestle managed its credit sale much more effectively. Next, it's about inventory turnover. Nestle again leads slightly with 4.6 times, 66 times compared to FNN's 4.13 times. This suggests Nestle is turning over its inventory more quickly, showing good inventory management. Now, for time interest earned. FNN has a better score for 28.99 times, while Nestle stood at 23.44 times. This shows FNN has a stronger cushion to cover interest obligation. However, when we examine the debt ratio, Nestle's is extremely high at 84.24%, while FNN is much lower at 38.58%. This indicates that Nestle is heavily dependent on borrowed funds, making it riskier in terms of financial leverage. Next is the total asset turnover. Nestle is recorded 1.770 times, while FNN managed only 0.96 times. This proves that Nestle uses its assets more efficiently to generate revenue. Similar for fixed asset turnover. Nestle again takes the lead with 3.56 times, slightly better than FNN's 3.04 times. So, overall, Nestle is more productive in utilizing its fixed asset. Looking at profitability, starting with operating profit margin, FNN achieved 13.29%, which is slightly higher than Nestle, 12.44%. This shows FNN is slightly better at converting sale to operating profit. For gross profit margin, FNN scored 0.46%, while Nestle came in just below 0.43%. This tells us that FNN is a little more efficient in managing production costs. However, for net profit margin, FNN has a clear advantage with 3.14%, while Nestle posted only 0.01%, almost break even. This could be due to high expenses or low sale profitability for Nestle. Next is operating return on asset. Nestle recorded 16.58%, showing it earned more income from each ringgit of asset than FNN, which stood at 13%. Finally, return on equity. Nestle had an impressive 75.90% compared to FNN's 18.90%. This shows Nestle provides much more returns to its shareholder, although it comes with a higher risk due to its heavy use of debt. In conclusion, while Nestle performed better in terms of efficiency, assets utilization, and shareholder returns, FNN stands out in liquidity, interest coverage, and overall profitability. Each company has its own strengths, and the analysis helps us understand their financial strategy and risk levels more clearly.
For recommendation to improve companies, first, enhance asset utilization. Nestlé Malaysia and FNN are optimizing asset utilization to boost operational efficiency and reduce costs. By upgrading automation and reducing idle capacity, such as increasing a production line from 70% to 90% usage, both firms can meet higher demand without major investments. These efforts improve asset turnover, increase return on capital, and drive sustainable revenue growth. Second, expand digital and e-commerce channels. To ensure long-term profitability, both companies are accelerating their digital strategies. Partnering with platforms like Lazada and Shopee will help them reach broader digital-savvy markets. For example, FNN's Shopee 66, FNN Shopee 66 campaign boosted engagement and sales, which make stronger data analytics and personalized marketing, and they can grow market share in the expanding digital economy. Third, strengthen ESG commitments channels. To meet rising stakeholder and regulatory expectations, Nestlé Malaysia and FNN must strengthen their environmental, social, and government commitments. This will include cutting emissions, improving water efficiency, and managing resources sustainability. For example, adopting closed-loop water systems in manufacturing can significantly reduce water waste. These actions not only protect the environment but also enhance corporate reputation and long-term investor confidence. Fourth, invest in innovation and product diversification. To stay competitive, Nestlé Malaysia and FNN must invest more in innovation and product diversification, with rising their demand for health-conscious and plant-based options. R&D will be key to meeting consumer trends and unlocking new markets. For example, Nestlé plant-based Milo reflects how innovation can drive growth and brand loyalty. By aligning with these trends, both companies can tap new customers and secure long-term profitability. And the last one is sustainable cost management. Disciplined cost approach critical. Nestle's shift to solar power and FNN lean inventory practices are reducing energy and storage costs while supporting sustainability. These efforts will cut operational waste, uphold quality, and strengthen financial performance, and all while aligning with growing consumer and regulatory expectations.
Okay, the suggestions for source of fund to expand the business. Firstly, internal funding. Retained earning in 2024 was 544.3 million, profit 2.4 times dividend cover. Cost saving from automations, digitalizations, solar panels. And second, external debit, low debit to equity, 21.3% equals strong capacity for borrowing, ideal for expansions, acquisitions, and new market. The third one, equity financing, right issues or private placements for long-term projects. And last, government initiative and ESG financing, grants for halal, automations, digital, and ESG initiative. Green bonds, sukuks attracts sustainable investors.
In conclusion, the financial comparison of Nestle Berhad and FNN from 2022 to 2024 shows that both are strong players in the food and beverage industry, but with different strategy. Nestle is efficient in using its asset and has high returns, but it relies heavily on debt and faces liquidity issue. In contrast, FNN maintains strong liquidity and profit margin, but needs to improve how effectively uses its asset. While Nestle takes more financial risk to grow, FNN focuses on stability and sustainable growth. Moving forward, Nestle should improve its short-term financial position, and FNN should boost its asset efficiency. Both should invest in innovation, digitalization, and sustainability to stay competitive. That's all from us. Thank you, everyone.